Hi, welcome to another HoneyStocks.com weekend analysis, and this one's going to be going out on the 7th of November 2020. Now, before I switch over to my screen share and walk you through a lot of the important charts and a lot of the individual stocks that I'm being asked about at the moment, I think it's very clear that the market is giving us information at the moment. Now, this analysis is not going to get into any kind of political debate or presidential debate or anything. What I'm just simply going to share with you is the charts, because something that I understand wholeheartedly is that price doesn't lie to us. There's a lot of you out there that will be watching that will be looking at economic data, economic factors, etc. I prefer to focus on relevant things like price. Now, that doesn't mean that I completely discard a lot of the information that we have from a fundamental perspective. I've got a huge appreciation for fundamental analysis. It's just not my preferred approach. So let me walk you through the charts. If you get some value from this, please do like, share, subscribe, all the good stuff. I think I'm very unique in my work, and hopefully that comes across. And for those of you that are maybe trying to learn technical analysis, you'll probably pick up a couple of things here and there, and hopefully you just get some value from it. Something to just get out there right off the bat is, if you're a short-term day trader, this is not going to be for you. Yes, we use technical analysis, but technical analysis doesn't mean day trading. My work is primarily geared towards the mid to long-term approach, and that means weeks to months. So if you're in there and you're looking for little 20-cent moves, 30-cent moves, this isn't going to be for you. So you can probably just switch off now. But hopefully you get some value from this, and let's see what the market's telling us. So before watching any further, please do pause the video. Make sure you're comfortable with that before proceeding. Basically says that I assume no responsibility for any positions that you may initiate on the back of this presentation. Now, maybe just to give myself a little bit of credibility as well, I'm registered with the CMT Association and working my way towards my chartered status. And if you get some value from this, please do subscribe, give it a like, thumbs up, and let me know what stocks we should be looking at. If there's anything that's on your radar, again, let me know in the comments. Now, where I really want to start with the analysis is just to spend 5 minutes talking about the overall market and where I think the strength is at the moment. And then I've got around 20 individual stocks that I feel like, again, should be on the radar for the forthcoming week or two. Now, the question that I'm getting quite a lot, especially this week, is what's my thesis with what we've seen with the election. Well, the short answer is I had no thesis. What I was essentially doing is keeping an eye on the US dollar because of the strong inverse correlation that we have with the S&P 500. Now, for those of you that follow my work closely, you'll already be familiar with this chart. I've been talking about it for the last 2 months. And rather than watch the news headlines and looking for reactions in the market, I think when you understand about these correlations, rather than watching news, it actually pays better. It'll keep you on the correct side of the market simply by watching the US dollar index. When the US dollar index is going down, we have the S&P 500 going up. So that's how I have been playing the recent market. I have not touched any of my positions. I simply held through, and naturally last week was a massive week. When we look at the sectors that had a massive performance, it's no surprise to see the semiconductors, the mobile payments, technology, home builders, etc. The leaders have continued to lead, and what we've seen with I guess the underperformance with the energy, utilities, etc., they just didn't get going whatsoever. So one of the tools that I like to use is the relative rotation graph. Now, I understand that Optima is professional grade software. I know that most of you will not have access to professional grade software, but this allows me to see where is the relative strength in the market. And what I'm observing, and certainly what's happened over the course of the last week, is I'm always looking to find the next area of outperformance. Again, we've got solar, which has been a massive performer this year. We've got biotechs now starting to move into the leading quadrant. We've got technology now starting to move. It was previously lagging. Now it does look like it's starting to gear up for a move into the improving area and then into the leading area. And this is a relative rotation graph. So this is relative to the S&P 500. Again, semiconductors looks like it's about to start outperformance. So what I've really been talking about this week with our clients is the possibility that we may see a lot of the major indices break out together. Now that would be incredibly bullish for the market. And certainly when I look at the economic factors, yes, I understand that there is a lot of issues out there, lost jobs, etc. And certainly there's a lot of sympathy on a human level. But when we look at the market, I think most of us understand now that the stock market doesn't reflect the economy, it's something else. And we just have to identify the trends in the market. We have to understand that when we have breakouts in the major indices, that is an environment where we want to be buying stocks and not selling them. And that's just common sense to me. We've got technology now, had a monster week this week. We're putting in a potential double bottom. So again, if we get continuation on this next week, then certainly again that would be bullish for the overall market. And again, we want to be owning stocks at that point. And again, that's just one of the tools that we use. Now, something else that I've been talking about with our clients is the potential for a 1 or 2 day volatility event, which could coincide with the announcement of the next president of the US. Again, I've got no political allegiance anywhere. I'm Scottish, as most of you will have picked up from the accent. I honestly couldn't care less who leads the US. I'm more interested in, I guess, what the charts are telling me. Now, I had a couple of questions this week about relative strength and how I use it. This is a chart that I posted to social media around a month ago, highlighting growth versus value and why we want to be in growth stocks and not value stocks. One of our clients reached out this week saying that the halftime on CNBC were, I guess, promoting a move into value just as growth was starting to move. And again, I don't take anything that the media, the mainstream media, I don't take anything they say with any kind of value unless it's backed up by a chart. And certainly we use technical analysis. Growth is still outperforming value. This is an uptrend, so we want to be owning growth stocks and not value stocks if you're in it for, I guess, the alpha and the percentage moves. Likewise, we can use these relative graphs to tell us where to stay out of the market, and we don't want to be touching European banks. This is a 27-year downtrend. So with that said, there are areas of the market that are starting to move, and I want to touch on these now. Now, a lot of you will be looking at the gambling stocks, the pen gaming, the DraftKings. Now, again, it's not really about me to talk about the valuations of the companies, because something that I understand wholeheartedly is when we talk about growth names, valuations ultimately go out the window. And I think those of you that perhaps have a valuation understanding, I think it can help. But if you're trying to apply valuation techniques to growth names and high momentum names, you're going to find yourself on the wrong side of the market and the wrong side of the stock at some point. And I'm really looking at these names at the moment, and I'm looking for a breakout here on a relative basis, and that would tell me that some of these names aligned with the BJK ETF will start to potentially move. It's no surprise to me that Penn Gaming, DraftKings, etc. all found a little bit of resistance, and they all declined when we hit this resistance level, and that's how I'm treating it at the moment. So as I'm always looking for the next areas of outperformance, I think starting to do some due diligence on these names, and potentially we could have a breakout over the next week or two, and these will be names that you would want to be participating in. Very pleasing to see volatility drop off over the course of the last week. Again, that's telling me that the market is quite comfortable with what we're seeing with the election, etc. Now we have emerging markets. Again, emerging markets, we've got Hong Kong, China, etc. So when we break it down, we know that emerging markets are essentially 40% China. So then we drill it down and we have a look at the ETFs. So, Chinese internet is a logical place to look. We can see that Chinese internet is starting to break out, and when we know what the notable holdings are, we go and do some due diligence on some of these names, and that would arrive at stocks like Pinduoduo, which has had a monster breakout. Now, something I also need to just say, if there are any disclosures that I need to make about any existing positions or any positions that have been recommended or talked about with our clients over the course of the last week, then I will do so. And this is one of those disclosures, Pinduoduo, this breakout here. A chart was posted into our community from one of our clients or members, and there's quite a significant position size in Pinduoduo. We've had a breakout. Now I would expect a little bit of a consolidation given where the stock has come from, but again, with emerging markets breaking out, with Chinese internet breaking out, breakouts are characteristics of uptrends, not downtrends. I'm never trying to call the top on a stock. I just let price do its thing and use trade management to manage risk. Now, another disclosure, Plug Power was provided to our clients this weekend. We have earnings coming up on Monday before the market open, and I think if we get a positive earnings reaction, I think Plug Power above $20 makes a lot of sense. Again, I think doing some due diligence there. A disclosure here, I have 2 positions currently running on CLDX on this trend here, and I am looking to add a potential third position on a breakout above $20 here. The trend has started to move nicely, and of course we're just looking for a breakout which will then hopefully give us a bit of momentum and a strong move to the upside. That's certainly what we're hoping for. NVIDIA, I'm sure most of you understand the chart by now, how charts work. We have uptrends, consolidations, uptrends. I think NVIDIA might just be starting the resumption of its uptrend after a 2-month period of consolidation. Again, AMD, potential breakout here in AMD. Again, I think we do have to be mindful and understand the potential hurdles that any stock may encounter on the way back up. There's a level here at 95, so I think if you've got a breakout here, certainly I think you just manage your risk, and if it's a stock that you like, I think taking it back up to its previous all-time highs, or certainly this Fibonacci extension level. We can see that these Fibonacci extension levels have been respected in the past, so we can say with a reasonable degree of certainty that they're going to be relevant in the future. So that's a chart that I like a lot at the moment. Again, TSM, Taiwan Semiconductors disclosure, this was provided to our clients this weekend also, and we like it above 91.50. We've had a monster breakout in Yeti Holdings. Now I would expect some kind of consolidation, perhaps a little bit of a pullback here given the strength of the move, but I think ultimately with uptrends, we all know the story by now. Any pullbacks in an uptrend can generally be bought. Some of you know it is buy the dip, but certainly we look for uptrends, and we think pullbacks oftentimes offer opportunity. I think Square Inc looks very, very interesting if it can clear and move above the $200 significant round number level. Again, it always amazes me that there's a lot of traders that neglect these psychological round number barriers. If you go back over some charts, you'll see quite often $50, $100, $500 oftentimes act as a barrier for price. And then ultimately what happens is that the price just kind of chops about a little bit for a few months. So rather than, saying thank you very much, Mr. Square Inc., you're left holding the stock where you could reallocate risk elsewhere. And that's something that we're quite big on with our work. Amazon, I think we're building another consolidation pattern here, very, very similar to what I was talking about uptrends, consolidations. Ultimately, with a stock like Amazon, if the major indices are going to break out, it would be very, very logical to me that Amazon breaks out along with that. Disclosure, I have 2 positions running along Peloton. It's had earnings are out the way, we've pulled back, we're still trading above a rising 50-day simple moving average. So again, we'll see how this ultimately starts to move. I think the reaction to the earnings is clearly the most important thing. It's not the earnings itself, it's whether, I guess, Wall Street wants to own the stock. I certainly, quite happy with what I've seen with the earnings on Peloton. I don't have any concerns whatsoever. I'm not going to call the top in the stock, but what I am doing now is managing risk, and hopefully next week, if we can get this nonsense out the way with the election, etc., hopefully we can continue on a nice smooth uptrend. Another disclosure, I think most of us have probably got some exposure to Apple in some way, shape or form. I am no different. Again, I think we're looking at a potential breakout here in Apple, and let's see what happens here. I've added in the AVWAP, and it looks like it's holding at the moment, and hopefully with this breakout we can get a strong move to the upside. Nuance Communications, again, beautiful uptrend. It's essentially done nothing for the last couple of months, but again, if we can get a breakout here above 36, we might well see some momentum start to come into that name. Microsoft, again, disclosure, I have a position in Microsoft. And again, what would it mean if we have the major tech indices breaking out? Well, given the weighting that Microsoft has within those indices, you would expect Microsoft to get carried along for a ride. That's certainly what I'm hoping for. Again, it's essentially done nothing like a lot of the tech names for a couple of months. But again, tech has been building, in my opinion, a bit of a base with a view to moving to the upside. Snap is now looking to move above its next Fibonacci extension level. Another disclosure, this is a stock that was talked about with our options clients on this breakout here. It's clearly done very, very well, and certainly if we can move above this $45 level, you would expect it to start to make its way towards 70. Again, I'm not wanting to get into the valuation side of things, because again, with a lot of these tech names and momentum names, valuations mean absolutely nothing. But I do have an eye on this $50 level. NVTA looks like it might be starting to break out. Very, very loose kind of trend line there. We've got 3 touches. We've broke out, pulled back. So I think ultimately what happens from here will be decided Monday, Tuesday. But ultimately, I think we just say we're bullish above this 161 extension level. I think we just say we're above $40. I think we have to be bullish. Again, there's nothing not to like about the stock. Disclosure, this is a chart that was talked about extensively within our charting feeds this week on this pullback, which has ultimately been bought. So uptrend in Fiverr is there for all to see, and I think we're probably breaking out again here. I think we do need to keep an eye on the $200 level, but again, we're talking about 14th, 13th century mathematics here with Fibonacci. I don't know why the levels hold merit, they just do. So if we can get through 200, the logical expectation is that it starts to move towards the next level there. I had a lot of, I guess, messages and emails over the last couple of weeks regarding Netflix and certainly what my thoughts are, etc. Although I don't have the time to respond to many emails or messages anymore, I'm just simply, way too busy. I think with Netflix, we're clearly in a bit of a sideways range at the moment. Ultimately, with it being Netflix, you would expect the resolution to be higher, but I think, if you're in this for a short-term swing trade, I think it's very, very simple. I think you just say you're bullish above 500, below it, maybe not so much. BYND Meat reports earnings this week, so I'll be watching to see what the reaction to those earnings is. I think we've got a very clear trend line support level. If it breaks below that level, I'd probably have a few concerns. Again, I don't know what the reaction to earnings is likely to be. I have no real opinion on the stock. I know I don't particularly enjoy the product, but does anybody? So I think BYND, I think it's a wait and see type scenario. Lam Research had a monster breakout this week. I think it's very, very simple here. I think given the strength of this move that it's had, I would logically expect a little bit of a pullback, a little bit of a consolidation, and then resumption of an uptrend. There is a potential there that you could look to possibly fill the gap. But again, we know with gap fills, you don't always get filled. So, Lam Research might want to do some due diligence there. Roku disclosure, this is one that's been talked about with our clients. Again, Fibonacci levels, this is a weekly chart for Mr. Roku, and we like it above 250. Pen Gaming, just to touch on what I was talking about at the start, we've got a lot of these gaming stocks, the gambling stocks, they're just in these ranges at the moment, and we're just simply waiting for a resolution to the upside. I never see the point in buying stocks when they're going sideways like this, because when they're moving sideways, they can do that for a few months, and when you have an understanding that there are other stocks that are moving, you just need to know where you're looking. You could have your capital invested elsewhere and just wait until this one breaks out. EMPH, again, we've broken out, in my opinion, going back to the solar stock theme. Again, I don't really want to touch on the politics side of things too much, but I think if there is a Biden victory, and certainly there's a strong case to be made that a lot of the solar names, renewable energy names, etc., stand to do pretty well in an environment such as that. Pinterest, again, is moving beautifully at the moment. We do have a target up at $83. We've got Nike, again, retail name. I think it's the chart kind of speaks for itself at the moment. So I think if we can get through this level and move above the 131 level, I think, again, provided that level holds as support, I think given the name, I think we could look to possibly see this start to move towards 175. And we've also got Chewy as well, which again, it looks like it's building a bit of a base there. I mean, I think the easiest way to just kind of highlight it, the bigger the base, the higher in space, as they say. So again, we're looking for a move above $72 with Chewy there. Now, I guess with the analysis that you've just watched, if you have had some value from that, please do subscribe to our channel, give it a like, give it a thumbs up. I do this for nothing. There are many better things to kind of do at the weekend, but fortunately, I guess for everybody watching, the weather is very, very poor in Scotland today, so I'm banging out a video here for YouTube, and hopefully you've got some value from that. Just give it a like, give it a thumbs up. It would be very nice of you. In the bottom right hand corner, you can also subscribe to my work. To the other end of that, if you are somebody that struggles with the markets, maybe you want to kind of learn technical analysis, etc., you can jump on to our website and check out what we do with our work. Very, very technical in our approach. We do have an annual membership. We provide a premium weekend analysis every single Saturday. We also provide a halftime Wednesday analysis. We provide trade ideas, which I'll show you what that looks like in just a second. We've got a trading community that you have access to. I provide charting support every single day, so if you need a second opinion on a chart, I'm always on hand. And I think one of the reasons why our membership is so popular, we provide free access to our full technical analysis program, so you can learn technical analysis and also have 1 year's worth of support with our membership. So again, feel free to go and check that out. But this is what our trade alerts look like. Very, very clean, easy to understand. We provide at least 12 hours notice for every single alert. NVTA, when it broke out here, went a lot higher. VSLR was a massive winner. Plug power as well, touched on that chart earlier, and again another big winner. Peloton, another big winner as well, which I'm still holding. And it's very, very clear what we do at honeystocks.com. I'm very, very open, very, very transparent with my work. Again, CLDX, the alert went out at 14, and as I said, I touched on that chart earlier on also. But I'm very, very unique in what I do. For every single official trade alert that I post out to our clients and members, I log every single one of them on our website. So feel free to go and check out and make sure that the types of stocks that we select are the types of stocks that you typically like to buy. We do not do penny stocks. We do not do day trading. We are in for good quality stocks, and we like to identify trends in the market and stocks that are going up. To the other end of that, I'm not saying that you can come in and you will make 900% on your capital. You cannot move in on every single stock, but hopefully what those charts will do, or that list will do, will demonstrate that I have an ability to identify stocks and uptrends. And again, don't take my word for that. You can go on to our website, have a look at our testimonials. This is an email that I received this week. For those of you that don't know, I'm now coming up to 12 months with my annual membership. Prior to that, I worked exclusively with clients on a one-to-one basis. But this is one of the emails received from one of our annual members. 2 primary IRA accounts up 77 and 103% since he started in December last year, and a third account that's up 65%. So again, that's the kind of result that we I guess we obviously can't guarantee anything. Nobody can guarantee anything. You could potentially make a loss, but that is a typical type of email that I've received in the last few weeks from members that wish to renew their annual membership. So again, feel free to go and check out our website. Everything is there for you to decide if we're a good fit for you. But it's going to be a big week in the markets next week. We'll see how things perform, and ultimately, hopefully, the path of least resistance is ultimately higher. But if you're looking to maybe get away from day trading, if you want to learn technical analysis, etc., we do have a limit on our memberships. I think most of you know by now, I have absolutely zero desire to have the biggest trading community in the world. I think keeping things small and manageable is incredibly stress-free, and I prefer a stress-free life. And we've just opened up 50 new membership spots I think there's around, I think there's 38 or 39 left. So, you know, if you feel like it's a good fit for you, feel free to go and sign up on our website. But if you've stuck around to the end, thank you very, very much for watching, and maybe we'll speak to you soon. Thank you very much.